Hello, everybody. Welcome to the Fundamental Analysis webinar this evening. My name is Troy. I'll be presenting for AvaTrade. As we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're seeing my screen all right and hearing me clearly. All right, great. I've got enough responses. Thank you. If anyone has any issues as we go along, just let me know. I'm happy to check if adjustments are needed. Okay, so the fundamental news, there are a couple kind of driving stories for the market today. Nothing huge, but enough to make things predictable for the near term and to give you some idea about potential through the rest of the week in terms of what you might anticipate could happen with a bit of focus on oil and also the bond prices and yields coming out of Treasury notes out of the U.S. We'll take a look at that fundamental news and some headlines and see how you might be able to use that to craft some strategies for today and through the rest of the week. As always, keep in mind, no one trade is guaranteed to profit. So with each and every trade, obviously there's some risk involved. You should manage your risk in a way that makes sense for you. Maybe using stop loss prices with your trades, maybe setting up hedge positions to cover moves that go the wrong way, maybe with trades that would trigger buy stop or sell stop, pending orders that can trigger in the opposite direction to cover risk, or a combination of those things. Also, we offer AvaProtect, which is a risk management tool that you find in our web trader platform and the AvaTrade Go mobile app, both of them on gold, silver, and all FX pairings. You have the option for a small premium cost to add protection to your trades so that any losses incurred during the protected time period are completely added back with that coverage from AvaProtect. So that's something to keep in mind as well. Now, as we go through some of these ideas with strategies and information, keep in mind it's not meant to be financial advisement, but is coming from an educational perspective to hopefully improve upon your trading strategies or build a new trading strategy if you're brand new to things or if you're looking to kind of start over. I know we get a mix of experienced traders, which I think we cover plenty of useful stuff in the webinars, even if you've got years of experience. And we also get plenty of new traders in the webinars. Maybe even some of you don't have live accounts yet. So we get a good mix, but I think it's the webinar that we'll cover, and in general, the webinars are useful for a wide range of traders. Now, what is fundamental analysis? Real quick, in a nutshell, it is the news. It's what's going on in terms of uh, headlines coming out of different countries. It could be regular economic events like factory production numbers, announcements that are scheduled for specific days and times about unemployment figures, GDP numbers, any of those types of announcements that we refer to as regular economic events. Those are pretty easy to plan for in terms of scope and timing because we know what the topic will be, what instruments it could likely affect if the news is better or worse than expected, and we also understand exact timing of when are those announcements coming. So that's one type of fundamental news. Another type, Surjit, welcome. You're one of the new traders, you're saying, and it's a process, but I think you'll do well. If you are already taking an educational approach as you're getting started, you're already a step ahead of what many traders have not done in the past. So welcome. The other type of fundamental news is what we might call extraordinary economic news. And so these types of extraordinary events, whether it's the global pandemic, it was Brexit months ago, it's it was the U.S. election, these types of events that there are headlines that break that you just don't know what they'll be or when they'll be. That's the other type of fundamental news that can just swing the markets and completely, honestly, mess up a strategy that was working great until this unexpected news might come. And so the timing of that type of news is unpredictable, and what the news will be and what instrument it might affect is unpredictable. And so you've got two types of, you might say, opposing fundamental news. The kind you can see what it is, when it is, and trade with the information as you know it. And the other type of news is the opposite. You don't know what for sure it'll be, or when it will be, or what direction would make sense to trade because you don't know what the news is. And so typically market moves make sense with the type of fundamental news that you already know, or pending orders to trade in that direction from nearby locations. And primarily pending orders in strategic locations beyond important price levels, waiting for breakthroughs either up or down through a resistance level or through a support level. Usually that takes care of getting in on unexpected, extraordinary news. Because if a price level breaks that there was no reason to break at the time you set the pending order, then some big news must have hit. So certain price levels, and we'll look at those on the charts, certain price levels, you know that if it breaks through, it's likely going to keep moving because it must have taken big news to break that price level. And so you can put trip lines in the market just waiting for extraordinary news to come. Saad, that's exactly a good question. He's asking what's resistance and support. What does that mean? And that's what I was referring to without using those words. I was saying important price levels where maybe it's having a hard time breaking above or below. In general, and we'll look at it on the charts in a moment, resistance is a price that as an instrument's price goes up, it keeps hitting and can't break through, can't get above it and drops back down. It goes up, hits that price, drops back down again. There's resistance in the market for one reason or another, some economic reason why the price can't get above a certain level. That's resistance. And you see it on the chart as a line of resistance. It's very easy to visually see. And support is the exact same idea, but the opposite direction. Price level where no matter how much the market tries, it drops, it hits that price and bounces back up. It has a hard time breaking below that price level. And that's what we would refer to as a support level. So let's go ahead and get into some of the fundamental news, and we'll look at some of this live on the charts and find those kind of price levels. And then we'll compare the fundamental news to, well, which one do we trust more? If there's reason for oil to go up, then we probably trust the support levels more than the resistance. So we look at the fundamental news and we say, OPEC cut production, countries are releasing their lockdowns on the economy. There's probably an increased demand for oil. So you have lots of fundamental reasons from the headlines maybe to say oil should go up. So then you get on the chart and you say, okay, I don't trust the resistance levels because it might break through. But certainly if oil pulled back to a support level, a price level that it has trouble going below, now I really trust that price level if the fundamental news is telling me the price should go up anyways. Okay, so that's the idea of looking at the fundamental news, understanding what way do you think the wind is blowing, and then lining up your technical analysis on the charts for proper entry points that you find to be advantageous for the direction that you think the movement will go anyways. Okay, so let's take a quick look at some fundamental news. We'll look at our web trader platform as well, because I think it's important that you understand beyond the MT4 and MT5 platforms, we have our own platforms that give you extra risk management, extra tools for risk management, meaning to understand your exposure, your potential profit, your margin requirements, to add extra protection like AvaProtect to protect against losses for small premium costs. All of those are available through our web trader and AvaTrade Go, which trade right on top of your MT4 and MT5 accounts. So we'll get to that in a moment. But let's look at the headlines. Wall Street retreats after solid start to March. Okay, not real negative. It's not real positive either. Just saying earlier today, through the day, the futures were red. The markets were pulling back a bit. They weren't flying through the roof, but overall today the markets have gone up. We'll take a look at that. at the major indices and such, and we'll see what the movement has looked like. But in general, they're saying, hey, after a solid start to this month, things have kind of calmed down a bit. Okay, just a general feel today that hasn't been a large amount of fear, and there hasn't been a large amount of positive momentum. Another analysis from a headline on Reuters: U.S. bond derivatives signal calm, but economic fundamentals could spur more sell-offs. Now, that might sound like a bunch of gobbledygook to you if you don't understand some of those key words. So let me just simplify it. A lot of investors keep an eye on safe haven instruments like bonds. Okay, if you buy into U.S. Treasury bonds, for example, are looked at by investors to understand what the fear levels might be in the market. Okay, and earlier in the week, U.S. Treasury Yields. The yield is the amount that a bond will pay you, guaranteed return over a year. Okay, U.S. Treasury yields went up, and if you look at this, it tells you that they hit a one-year high of over 1.6%. Okay, in terms of the yield, what it will pay you. Okay, and so what happens if bond prices start to look and let me just backtrack a second. When yields go up, typically the price of the bond is going down. So you can buy into it cheaper and get a better return. Why would these bonds be offered at such a deal? Higher percent return, lower cost, because people were buying into the stock market. It was reaching new highs, right? Stocks and indices were reaching new highs. So to lure people back into the bond market, they have to offer higher yields and lower price. So at some point, if the market is viewed to be overbought maybe, and especially if there are fears of inflation, meaning the devaluing of currency, if there are fears of that, then those high percent yields on bonds start to look attractive, and there can be a rush into the bonds, causing stocks and indices to pull back, which is what happened just recently. Okay, so these higher yields dropped because people started buying into them, which then the banks say, okay, we're not going to offer you so much yield now. The demand went up, and the yield percentage dropped. Okay, and that kind of calmed things because the yields on bonds weren't at that one-year high anymore. They pulled back a bit. But let me ask you all a question. What do you think will happen if the U.S. passes stimulus this week, which it's widely expected the Senate will be able to pass it on a party line vote in the U.S., near 2 trillion in stimulus? What do you think happens to the strength of the USD if this 2 trillion in stimulus passes in the US? What do you think might happen to the strength of the US dollar if 2 trillion in stimulus passes? And the US dollar strengthened a bit over the past week, and it seems to be giving ground again. What do you think happens to the strength of any currency if 2 trillion of it is passed out for free? Yeah, dollar will go down, most likely. I'm with you. So by Takalani, the opposite. If you're saying the value of the USD would go up with stimulus, it's actually the opposite. The stock market tends to go up because the stock market loves free money, and the currency weakens. Because think about it, what if we had a 2 trillion diamonds and passed them out for free? What would happen to the value of diamonds? They would drop. If you had 2 trillion ounces of gold and handed them out for free, the value of gold would drop. So it's supply and demand. If you hand out 2 trillion US dollars to the economy as stimulus, the strength of any $1 tends to weaken then. So the stock market loves that. So as they get close to passing this 2 trillion in stimulus this week, you could see the stock market rush up to new highs. You could see the US dollar weaken with the euro and the pound climbing, which they already did today. We'll look at the charts. The fundamental news behind that, Yeah, Saad, why would gold go up if the economy's happy, if the stock market's going up with free money? Why would gold go up at the same time? I tend to agree with you that it might go up. Why would gold go up as the stock market's going up at the same time? Seems odd because gold is a safe haven when there's fear. If people are happy about free money and the stock market goes up from that, why would gold go up? Yeah, weak USD, fear of inflation. Exactly, Saad. So gold is more of a inflationary safe haven. So if 2 trillion in US is passed out, that could drive gold up. That could drive gold up against the US dollar because of inflation fears. So that brings us back to the bonds, which is my whole point in this conversation. As bond prices drop and the yields go up, and that could happen again. If you see the yields go up to a number like this 1.614% on 10-year Treasury notes, like they're talking about here, what do you think that could signal in terms of inflation fears? Yeah, exactly. Bond yields reaching a high that hasn't been reached for a long period of time could lure people into buying bonds all of a sudden, could lure large investors into buying bonds if there's fear of inflation. What could cause the fear of inflation? 2 trillion in stimulus. So keep an eye out for the longer term situation here over the next weeks that you could see a rush up in the equities, meaning stocks and indices, a rush up with the stimulus that's likely going to be passed, followed by a rush into the increased yields for bonds, thereby creating a potential crash back down in the equities. Okay, that pattern has repeated itself many, many times when there are inflation fears, when easy money, low interest rates cause the stock market to go up too far, too fast, because everyone's buying into stocks, bond yields are raised, so they become more attractive. And once they become attractive enough, the rush into bonds with the fear of inflation can cause a crash of the market, okay, or a large pullback. So that's something to keep an eye on, are these bond yields, and you can check them on Bloomberg, lots of places, okay? Keep an eye on the bond yields. Just look for the headlines about the bond yields. That's easy too, like this headline. If you see that bond yields are reaching a one-year high again, those sorts of headlines, you see stimulus passed and stocks and indices went flying up through the roof. That might be something if bond yields get too high and you start to see all of a sudden the yields drop in the bonds because people start rushing into the bonds and out of the stock market, that could be a tipping point for the market to have a strong reversal. So it's something to keep an eye on. Likely with the stimulus, you could see bond yields shoot up back like they were less than a week ago. Okay, as the US dollar weakens and the stocks go up potentially from easy money. This is another big headline to keep an eye on. There are OPEC meetings this week. OPEC production plunged over the past couple months because the OPEC plus nations agreed on production cuts a while back and then agreed to maintain those production cuts. And then Saudi Arabia came out and beyond their already decreased production, decreased it more. And that's what they're talking about here, drove the oil prices up along with many economies coming out of their major shutdowns from the pandemic. And that has got an oil up above 60 a barrel for both US crude and Brent crude. So OPEC meets this week and they're talking Thursday. If you read this article, Thursday could be the day that you hear news that, hey, we'll maybe increase production for April. And they're saying it's expected maybe by 500,000 barrels. Okay. They go on to say it's widely expected that there could be 500 barrel a day increase in April. Says it's widely expected they'll add 500,000 barrels a day when these nations meet this week. Okay, so keep that in mind. Oil's rushing up right now if we look at the charts, but what could those meetings this week bring? Even leading up to the meetings, if it's expected, as the article says, widely expected that production cuts, or I'm sorry, increases in production could come back because the prices have gone up so much. Now they want to increase their production again and sell more oil at that price. But what happens when they increase production? Oil then drops in price. This is the seesaw movement, up and down, supply and demand. So that's a headline to keep in mind as this week progresses with oil, that there's good reason why oil has gone up, and there's also good reason why it could come crashing back down. Okay, so I had said that I'll show you the web trader real quick and the AvaTrade Go mobile app. If you want our mobile app, you go to trading platforms, go to AvaTrade Go, and download it from your app store. Okay, there's a link that takes you to either of the major app stores, and you'll see the same tools, AvaProtect, and the trade calculator features with the take profit and stop loss, calculating your exposure and your potential profit for you in the app. The same as what you'll see here. If you log in from our main website, you'll see those same features in our web trader platform. And you can switch between your accounts. If you have more than one MT4, MT5 account, demo account, live account, you click here and go to switch to demo, or if you have multiple live accounts, they'll be listed here, and you can switch between multiple accounts just with one click. And this user interface will trade on top of your MT4 accounts, your MT5 accounts, etc. So I wanted to show you real quick, and you should play around with this platform. I don't want to take the time to show you the whole platform, but if I have an instrument I want, it's very easy to search, a lot easier than the MT4 to find instruments you're looking for. You can create favorites lists, all kinds of stuff. So here's the AvaProtect. Let's say I wanted to buy on gold, I don't know, 20 ounces. Maybe I think gold will go rushing back up as stimulus maybe passes this week. And I'd say, okay, I don't think gold will drop below 1,700 maybe is the number I have in my mind. And I'm just kind of making that up right now. I didn't do the technical analysis on it, but let's pretend that you think 1,700 is where it won't drop below. So maybe you say 1,690 is the price that you don't think it'll hit, and then you're buying on that move. And maybe your take profit, you think it could go back up to 1,800 maybe, or 1,850. Okay, it was above 2,000 not that long ago. So 1,850 is not that out of mind if there's huge inflation concerns that hit. If there is a sell-off in the stock market because of bond yields going really high and people buying into the bonds with the inflation fears, etc., you could easily see gold push back up to levels that it was at in the past month or two. So no guarantee, obviously, but then I look at my risk and my potential profit and I say, wow, that's nice. More than double potential profit, not even getting back even to 1,900, let alone 2,000. I could have double potential profit compared to risk, getting below a low that it hasn't broken for a long time when we look at the charts. But then you might say, but my balance is only 1,600 in this example on this account I'm showing you. So if I'm looking at that, Saad, it's just an example. I'm not telling you gold will go to 1,850. I'm giving you an example of how you might use fundamental news to pick a direction. Like I said, we haven't looked at the chart yet for price levels, and we could do that in a moment. We'll look at gold. But I'm giving you an example of risk management, how these tools can help you with risk management. So assuming you thought gold would go up with the stimulus maybe that's going to pass in the US, and maybe you thought inflation fears would drive gold up somewhere near some highs that it had reached in the past month or two, 1,850 being about not even 50% back up to where it had reached just in the past couple months. So if gold was to reach 1850 and you see your potential profit, but you look at your risk and you say, boy, I don't want to risk that much. Maybe you say, for the time being, if I think gold could go rushing up because maybe you think stimulus will pass in the next couple days in the US, I think it could be a little bit longer than that. But in this example, maybe we say, let me do AvaProtect. How much would it cost me to protect these 20 ounces for 2 days? And I say, wow, I don't have to risk 1,000. I only have to risk 212 for the next 2 days. Even if it crashed $200 an ounce the wrong way, I'm protected against any and all losses until this expiry of my protection, and it only costs me $212 premium cost. And I can just sit and wait it out for 2 days. And I know at worst I'm down 212. If gold goes up and I make $400, well, okay, on the move, I paid 212, I'm still up, right? So this is an option with this platform and with AvaTrade Go, our mobile app, to have this type of protection rather than maybe using a stop loss, okay? At least for that time period. Then afterwards, you could add a stop loss if you wanted to. So maybe you watch the headlines and you wait until it gets closer to where you think, hey, they are getting close to maybe passing stimulus. And if you like the price level, then maybe you set something like this up. Okay, but if you wait too long, you miss the movement, right? So this is an option for managing risk, AvaProtect. And you see how it was telling me how much I'm risking to my stop loss, what my potential profit is, etc., right there in the order window before you buy or sell. So very simple for risk management. Fundamental news, since we're talking about it, on all live accounts, if you're working with a demo right now, yeah, we're going to look at the chart for gold. Just a moment, I promise you. So if we're looking at Trading Central, which is a feature that's for free on all live accounts, if you're working on a demo, only the economic calendar works. If you're working with a live account with us, all of these other advanced features work. And for fundamental news, you can just go to Market Buzz right here. Okay. It will pop up in a moment. It's just loading. And there we are. So the most trending instruments have the biggest bubbles. So Tesla, 141 publications, if you click this bubble, that are there about Tesla. So I click on it. Here's your fundamental news. Okay. There's an article about German exports that has to do with Tesla, or else it wouldn't be here. This was just posted 1 hour ago. So you can click on the articles and expand them. It takes you right to the web page where it's located and read about Tesla. What's going on with the fundamental news? It's really a time saver, okay? Especially if you're looking for specific instruments that you're interested in. Maybe you always like to trade on Tesla. Well, look how much time you can save. All of these articles 1 hour ago, 1 hour ago, all of these are 1 hour old. Look how many articles involving Tesla. I can click on it, boom, takes me to the web page. Here's an article about Tesla. Stake boosted by FineMark National Bank and Trust. How would you know that without having a source to show you? And you can read and see, what does that mean for Tesla? Is that good or bad news? Just came out an hour ago. Okay, you can trade on this fundamental news. Okay, it's a very useful feature here for traders that are using the web trader platform. Okay, so lots of fundamental news at your fingertips through the platform here as well. So let's take a look at the live movements. Let's see what's happening. I know gold has been requested, so let's take a look at gold. So we're looking here, and I'm on 5-minute candles, and you might say, wow, I missed the boat, right? It already climbed today. Look at that. Up, 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 right? What's driving it up? Probably anticipation that stimulus is going to pass in the US. Okay. It got through the House of Representatives. It only needs to get through the Senate with a simple majority. With the way that the Democrats in the US are going to pass it, they're going to use a special rule. I believe it's called reconciliation to be able to pass it without a 2/3 majority, which they would never be able to get it to pass with a 2/3 majority, so they're going to do it in a special way that they can pass it with a simple majority of 51 votes. And they only have 50 Democrats in the Senate. They need all 50 plus the vice president's the tiebreaker. And so they are confident they can get it passed that way. And so US dollar was weakening today. And so up went gold, inflation fears. If we go to 1 hour candles, you say, okay, it's not up that much from the low. We could say here's a support level here that it did not break, down around 1708. Remember I mentioned in that example in the web trader platform that maybe you don't think it'll break below 1700. Okay, that's reasonable to think. Gold came crashing down here over the past days and did not break 1700. So with all of that momentum dropping, it still didn't break below 1700. So it would take something new to strengthen the USD, to lower inflation fears, probably for gold to drop below 1700. So what would cause inflation fears to drop? If they don't pass stimulus, right? If all of a sudden they say, nope, some of the Democrats are bailing out, they're not going to pass this $2 trillion in stimulus, it looks like they're going to have to pass half that amount of stimulus, you'd probably see gold plunge and the US dollar strengthen because inflation fears would disappear if there was fear that the stimulus wasn't going to pass. Well, it's the opposite situation today. There were headlines and talk about that it passed in the House and they look like they're going to get it through on a party line vote in the Senate and that they think there will be a stimulus deal passed of $2 trillion. So up goes gold. It's very predictable fundamentally what's happening. So this is gold climbing here in the 1 hour candles. Okay, pretty much all day. Gold's been on its way up, not down. So if we then go to 4 hour candles, and I saw a question come in, Saad, the articles I pulled up, I was on Reuters, Reuters.com. Okay, I'll quickly show you here. So first of all, in the web trader platform, you go click on the tab, you go to Trading Central, and you go to Market Buzz, if that's what you were asking about, Market Buzz. And just takes a minute to load because it's a lot of data. There are a lot of articles. You've got Pfizer, you've got Amazon, you've got Bitcoin, you've got Ally, Tesla, and others that you have seen in the headlines. That's why they have the biggest bubbles. It doesn't mean ignore the smaller ones. There might be some smaller ones that are gems that you might be interested in trading on. Okay, Bank of America, Boeing, etc. Okay, so and I was simply on Reuters for the other articles. Okay, so back to the platform. So on gold, if you're looking at a micro view, if you're looking at a micro view, you'd say, wow, we missed the movement, right? Up went gold already today. If you're looking at a macro view, let's go 4 hour candles, 1 day candles, let's go 1 week candles. Now we find support. Now we understand why the price bounced where it did. Look at this line I already drew, right at 1708. You see this line? Look, that line, without looking at 1 week candles, I found a support level that was an old resistance level. Okay, so I look over here and I see on the 1 week candles, this is an important price. Just above 1700, it was resistance. The price hit here back in, let's look at the month and day, January. March of last year. March of last year, so about a year ago, the price of gold hit about 1700 and crashed back down. You see that on the 1 week candles. Price of gold hits this price level here and crashes down for 2 weeks straight to the next support level, which, by the way, was also predictable. When it hit this price, some of you were asking, what is support and resistance? Look at this price down here. Resistance, resistance, the price hit and dropped, breaks through with a big breakthrough candle, and then becomes support, 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 classic. Old resistance becomes support. Then weeks later, it crashes and look where it stops. Predictably, right on the support level, right here on the 1 week candles is where it stopped and bounced up. Okay, so that is an example of a support level that was there for weeks and responded perfectly here. Okay, so now let's fast forward to where we are now. This was resistance. Then it went above and became an area of support. Now the price of gold came down. It hit that price level right here, the old resistance, and bounced up again. Okay, so technically speaking, from a technical analysis standpoint only, even if I'm not looking at fundamental news, I might say it's worth a shot. Let me take a reasonable size trade. Okay, maybe I decide I want 20 ounces, whatever it is. And I say, okay, I'm going to buy. There, I buy on gold. Why? Because there's a 1 week candle support level here that it already bounced off of. This week it bounced, the last week, this one I'm pointing at, it hit and bounced up. You see the wick. Then it hit this week and bounced up again. So a double bounce off of this support level that was an old resistance level here. So I say, okay, technically speaking, it looks like it's trying to go back up. Then I say, okay, I'll put my stop loss below that support. It's asking me if I want to agree to one-click trading. I say, okay. Now it will let me set my stop loss with that one move. There it is. Okay, so now I'm below that support level on with my technical analysis. Then I say, okay, where would I take profit? I could say I'll take profit at the first resistance level, the second one. As I look at this, I think this looks like a price level that makes sense on the 1 week candles, right? Look at that price level right about here. Okay, this was resistance, resistance, 3 weeks in a row. The price went here and dropped, here and dropped, here, same spot, 3 weeks in a row, then plunged. So if the momentum has reversed, if the price got up near this level, that might be where it finds resistance again. And so that's around 1870. I happen to put my take profit at 1862. Okay, so just using support and resistance on the 1 week candles, I've got a potential profit about 3 or 4 times what I'm risking, about 3 to 1 ratio. Potential profit 3 times more than what I'm risking. And it makes sense from a technical analysis standpoint. Okay. Yeah, of course, Cindy, it could test that support level again. It could even break the support level, right? Chowdhury, good question. You're saying, should you buy gold now or wait for the stimulus package to be finalized? First of all, understand that I'm not telling anyone to buy on gold. Okay, I want you to decide based on information that if you think gold should go up, then you should buy on gold. If you think gold should go down, then sell, right? I'm not here to give any financial advisement, but I'm here to show you information. The information is there's a support level here that it did not break with 2 attempts. The information also is that stimulus is likely going to pass in the US. No guarantee, but it looks like maybe near 2 trillion in stimulus. They've been saying 1.9. We also understand the basic fundamental concept that if you hand out free money, that tends to weaken a currency. It also tends to drive gold up with inflation fears. So knowing all of that fundamental news, then you make a best judgment. Do I like the idea that gold could go up? I kind of do. I think it's a decent probability, but you have to decide that that's what you think. And if you do, then it's up to you the exact timing. But if everyone thinks stimulus will pass, then gold will start responding now, maybe. It won't wait until it actually passes. By the time it passes, you might have missed the reaction because many times movements occur before the actual event occurs in anticipation of the event, if you understand. Okay, so if everyone thinks stimulus will pass, that could drive gold up actually before it passes, right? If stimulus means inflation fears. okay? The inflation fears could come later. We could miss the mark by getting in now. Maybe it breaks the support and then goes back above it. Those things can happen. So you go in with a calculated risk in the direction that you think the fundamental news makes sense, with technical analysis that makes sense, and you're not going to be right every time, but you certainly have a great potential to make a lot more profit in a setup like this than what you're risking. And you can always re-enter. We could be wrong, it could hit the stop loss, then it could go up, we could re-enter, and then we win, and we're still in overall profit. Kawanda, good question. The question is, if your technicals and your fundamentals are conflicting, which should you use? I say I wait until they're not conflicting. I wait for confirmatory situations where the fundamental news now says maybe gold should go up with inflation fears. If it just broke this support level instead of bouncing, I would say, you know what? Something's up, something's funny. It broke the support level on the 1 week candles, and all the fundamental news says that maybe gold should go up. That's a situation where I don't trade because it doesn't make sense until I find out why that happened, and I can, in my mind, feel comfortable about understanding what's happening. So that's a good question. If the things that you outline for your trading strategy, do it like a checklist that you need A, B, and C all to occur before you trade. If only A occurred and B and C conflict with it, then it doesn't make sense. It doesn't fit your strategy. And so maybe then you just hold off on that potential opportunity until it lines up properly. Good question. The question is, how do you know what lot size to use and for your balance, and how do you know you won't blow your account? That's the good part about the web trader. So remember I showed you on the gold example. And since we just did a simulation on the MT4 with gold, we can do the same thing here. So remember I said, oh, maybe I'll do 20 ounces, right? So there's my 20 ounces. I put my stop loss at a certain price, 16.95, something like that. And right here's my possible loss to that stop loss. If it hits that price, I'm down 8.25, which essentially would lose half of my balance in the account you're looking at here. So, so that's the thing that this platform does for you, is helps you not blow your account by helping you risk manage in a way that you could say, oh, I better have a smaller trade size. Maybe I go 5 ounces. Now I'm risking only 207 to my stop loss with a balance of 1600 plus. So maybe I say, okay, that's acceptable in my mind. Or whatever amount you're willing to risk on the move, you should know what you're risking. And this platform helps you do that. Okay, very good question. Okay, so that's gold. That's more of a longer term move. I'm below a 1 week candle support level. I'm hoping it goes up to the 1 week candle resistance up here, taking profit just before that resistance level. Okay, now predictably today, look what the pound did against the USD. This should reassure you that there are inflation fears with the USD. Look what the pound did against the USD today. Okay, the pound went flying up against the USD. It's not like there's great news out of Great Britain, right? Why did the pound go flying up against the USD? Look at the euro. Same thing. The euro went flying up against the USD. What does that tell you? The US dollar is weakening in general. Stimulus is coming. All of this seems to align with potential inflation fears. A weakening USD against other currencies. Gold already started to bounce off the support level. So you start to look and you say, okay, all of this makes sense. Now, it doesn't mean that there couldn't be a pullback. Here's resistance right here. Okay, for the Euro USD. Resistance, big drop, right? This is getting near that resistance. So a technical trader could be shorting Euro USD soon. Okay. I don't like to do that because the fundamental news says the USD should weaken. Fundamentally, it says Euro should rise against the USD. That's what it did. Why should I trade against the fundamental news? Why should I try and force the Euro back down against the USD? What might make more sense is put a pending order down here. This is an old resistance level here, right? Resistance, resistance. If this pulls back down to this support level here, this price should be support because it was old resistance right here. So if the price pulls back down, then it might make sense to buy on the Euro USD from a more opportunistic price rather than selling on the Euro USD. Type OK if you're with me on that. Trying to align your move with the fundamental news, which is USD is weakening because of inflation fears, because of potential stimulus handing out trillions of US dollars. That's why the euro went flying up against the USD. The pound went flying up against the USD. Trying to trade against that just because there's a resistance level might not work so well. It could just break the resistance and keep climbing because the fundamental news is pushing it up. Okay, so it might make more sense to just hope for an opportunistic pullback to a support level. What kind of pending order would buy from down here? What kind of pending order do you program that buys from a lower point? You could program just in case it pulls back that you get in above this support level with what kind of pending order would buy from a lower price than it is now. I'll show you. You switch from market execution to pending. And you have 4 types of pending orders. The buy limit buys from a lower price. Okay? Buy limit buys from a lower price. So I could say if the Euro USD drops to 120.62, okay, 1.2062. By the way, it dipped just below 1.20 flat. It hit 119 and change, just below 1.20 before this big climb up. Okay, you see here. Okay, so there's my pending order then. If it comes down here, my pending order buys. And I might, let me just get rid of this red line I drew so we can see my pending order. I'll delete the support level I drew. And so there's my pending order. Getting in just above this little old resistance, which may act as support now. So if it pulls back, that would be an opportunistic spot to get in. You might put your stop loss just below the support level, right down here. Okay, this price level here would be a spot that might make sense for your stop loss. So 1.20, maybe 55. Okay, as an example. So you're not risking much here. Stop loss is right down here, just below the support. If it hits the support and bounces, great. If it hits the support and breaks it, you're not risking much, okay? And you're aligned to go in the direction of the fundamental news. Unfortunately, we missed this movement because the webinar is late today. If the webinar was earlier, like it is on Thursday, we would have gotten in with the movement way down here. And you could be in huge profit on the Euro USD because we knew all day long today that the USD was probably going to weaken because of the same fundamental news we just looked at. So earlier in the day, pay attention to those headlines like what we looked at. Pay attention to the fact that they said the stimulus passed in the House of Representatives. That news was there this morning. Okay, it was predictable USD would weaken with that news, and up went the euro. You could have been riding the euro up against the USD until it reached this resistance, and maybe that's the spot you would have gotten out with your profit. Same with GBP USD, the opposite USD JPY. USD was dropping against the yen, etc. Okay, all for the same reason. Now we can look at crude oil real quick before we end the webinar. We're about out of time. Remember the headline about OPEC, okay? So on the 1 hour candles, this is why this could be an opportunistic spot because the price is pulled back, okay? And if we go to 4 hour candles, we say there's some support down here. These are 4 hour candles. This is support, 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 little breakthrough and right back above, and then support again. So this price level around 59.5 seems to be a support level. Why is this still an opportunity to potentially short crude oil? The downtrend is showing it keeps going down, back up, down, back up. So this is an opportunistic climb in a larger downtrend. Why is oil downtrending right now? Fundamentally, what article did we look at? What did we talk about that OPEC might do Thursday this week? More production. And that's been known, okay? That's been known for the past couple days that the anticipation is that, what did the article say? It's widely expected 500,000 increase in oil production, 500,000 barrels per day increase. So that news was already there before I showed it to you. That news was there all week, right? Yesterday, Sunday, over the weekend, you could have already known by doing your fundamental news analysis and checking what's going on with OPEC if you like to trade on oil, and seeing articles that said, hey, it's widely expected that OPEC will increase production by 500,000 barrels per day. You'd say going into this week on Monday, you'd have said, well, I bet oil will drop. And you could have traded at the open of the market when oil was up here this week. You could have sold on oil from up here. So every time it went down, take your profit. Look at the support level. Look how predictable. Okay, this was an old resistance price, this price level here. Okay, you see support, support. If you caught it up here, knowing that, hey, they might increase production, sell. It comes down to that support level, close. It bounces back up to the resistance here, sell again. It drops to a support level here, right? You take your profit. It goes back up to a resistance level, which is this old support. Hey, it's a staircase down right now. Down, back up, down, back up. So what's the move here? Fundamentally, it is sell on crude oil, right? Put your stop loss above the resistance. Now, how patient are you? Will you give up if it breaks this resistance and hits your stop loss here with one resistance level, or are you more patient? Do you say, I put my stop loss above 2 resistance levels? That's up to you as a trader. If you've decided the fundamental news says oil should drop, then it's up to you on the exact entry point. Where should I put my stop loss? Where should I put my take profit? If you're a scalper, you probably say, I'll only put my stop loss above 1 resistance level. If it breaks, I get out with a small loss. If you're a more patient trader, you say, no, I'll put my stop loss above 2 resistance levels or 3, right? Maybe above today's high or this week's high or this past 2 weeks high, etc. for a more patient trader. In this example, let's just say we are scalping and we say, okay, if it breaks the first resistance, I'm out. If it gets to the first support, which is down here, maybe you say, I take my profit. So we've got about equal risk to reward in this setup. Okay, good question. When you try to do this, if you open a trade, a market trade, market move, all you have to do is left click and drag. Left click on the open price and drag, and it creates the red line for stop loss or take profit, depending which way you're dragging. Okay, it's that simple. And the first time you try to drag and drop, it'll give you that warning. Hey, do you approve for one touch trading? Because it's not actually opening the order window to set those settings for you anymore when you left click and drag, okay? But it's very convenient to set your price levels this way. That way you can look at the support and resistance while you're setting the price for your stop loss and take profit rather than being on a separate window from the chart, okay? Good question. Okay, so we're in alignment on oil for the OPEC meeting later in the week, selling to, and this is a scalp move. You also could put a pending order up here. Pending order here could back up this first move. So to back up this market move, if this hits the stop loss and goes to the next resistance level, you could have a sell limit program to sell from up here. Understanding that maybe your entry point's not perfect. Maybe your idea is good, that oil might drop leading up to the OPEC meeting, but maybe your entry is not perfect. So maybe it goes up, this first attempt hits your stop loss. You could have a pending order right up here at this next resistance level to sell with the stop loss above this resistance level. So you could create several opportunities for yourself, understanding one or two tries might lose before you win, but the potential profit could still be bigger even if you only win 1 out of 2 or 1 out of 3 attempts. Okay, so you don't, a trading strategy typically is not a single move on an instrument. Many times it's a move with backup re-entry prices ready to go, understanding that your first entry is not always perfect. So this market move, if I had time, I would set up a pending order here as a sell limit, and maybe another one up here at the next resistance level, 2 backup moves. Okay, if I believe eventually the fundamental news will bring oil down. Now, if you don't, then certainly you'd be thinking the opposite direction, right? You'd be buying and setting up pending orders to buy from lower prices. But obviously the fundamental news as we look at it seems to tell us we understand why oil could push down. So then you go in the direction that you believe the fundamental news tells you to go. Okay, thank you everybody for joining. I'm sorry if I didn't get to everyone's questions, but we've filled almost a full hour here. So good luck with your trading. I expect big movement this week on oil, on the indices. Keep an eye on those bond yields. If they go flying up again, it could be a cue to potentially short stocks and indices. Okay. If stimulus looks like it's going to pass more and more, it could be a stimulus on gold to have some big movement as well with a weakening USD. All right, everybody. Good luck with your trading. We'll be back at it on Thursday at 11 a.m. GMT time.